Hey everyone, welcome back to Corporate Decoder. Today, Coeur Mining Incorporated CDE just filed a Form 8 cake, announcing the completion of a major debt exchange, and I am seeing a key takeaway for debt holders. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is all about how Coeur Mining is managing its debt and what it means for investors holding its bonds. Alright, let's dive into what Coeur Mining Incorporated has been up to. They filed this report, a Form 8K, which is basically a way for companies to share important news with investors quickly. The big news here is about their debt, specifically a deal involving their senior notes. Coeur Mining is a company that deals in the mining of precious metals, as you can probably guess from their name. They've been around for a while and are a significant player. Now, they've just completed something called a private exchange offer and a consent solicitation. What does that mean in plain English? Think of it as a big swap. They had some existing debt called senior notes due in 2032, issued by another company called New Gold Incorporated. Coeur Mining stepped in and offered to exchange these old notes for their own new notes. This exchange deal involved about $400 million worth of the old New Gold notes. Coeur Mining issued their own new 6.875% senior notes due in 2032, to the tune of over $385 million to holders who agreed to the swap. This was done privately, meaning it wasn't a public sale, and they relied on specific rules in the securities laws that allow for these kinds of private deals. So what are these new notes like? They carry a 6.875% interest rate, meaning investors get paid that much each year. This interest is paid out twice a year, on the 1st of April and the 1st of October. The company did not get any new cash from issuing these notes directly. Instead, they used them to essentially buy back or exchange for the existing New Gold debt. They did, however, pay cash for some aspects of the deal and incurred fees and expenses. All the details of these new notes are laid out in a legal document called an indenture. This document basically sets the rules for the notes, including what happens if the company can't pay or if certain bad things occur. It is a pretty hefty agreement that outlines everything from interest payments to what triggers a default. These notes are considered unsecured senior obligations. This means that if Coeur Mining were to go bankrupt, the holders of these notes would be among the first in line to get paid back, but only after any secured debts are settled. They rank higher than any debt that is legally subordinate. However, they are effectively lower than any debt that is backed by specific company assets, like property or equipment. Now, looking at how Coeur Mining can manage these notes in the future, there are some interesting clauses. Before the 1st of April 2028, they have the option to redeem the notes. This means they can buy them back early. When they do this, they have to pay back the full amount of the note plus a make-whole premium, which is an extra amount to compensate the bondholder for any future interest they would have earned. They can also use money from certain stock offerings to redeem up to 35% of the notes before the 1st of April 2028 date. After the 1st of April 2028, Coeur Mining can redeem the notes at prices specified in the indenture. This gives them flexibility to refinance their debt if interest rates fall or if their financial situation improves significantly. One of the most critical parts for any bondholder is what happens if the company is bought out or undergoes a major change in ownership, referred to as a change of control. If this happens and Coeur Mining hasn't already decided to redeem the notes, then the note holders have the right to demand that the company buy back their notes. And they get paid a little extra for this 101% of the principal amount plus any unpaid interest. This is a protection for investors. It ensures they aren't stuck with debt from a company that is no longer the one they invested in. Another important clause relates to asset sales. If Coeur Mining or its subsidiaries sell off significant assets and don't use that money for specific reinvestment purposes outlined in the agreement, they are obligated to offer to buy back the notes, along with other debt that ranks similarly. This is a way to ensure that proceeds from major asset disposals are used to pay down debt, providing another layer of security for bondholders. The indenture also includes what are called covenants. These are promises by Coeur Mining not to do certain things that could harm the bondholders. For example, they are limited in how much more debt they can take on, how they can pay out dividends to shareholders, and restrictions on selling assets or entering into major business combinations like mergers. These covenants are crucial for maintaining the value and security of the bonds. And of course, there are events of default. These are specific situations like failing to pay interest, breaching covenants, or going bankrupt that allow the bondholders or their representative, the trustee, to demand immediate repayment of all the outstanding debt. It is the ultimate protection if things go very wrong. This section basically just refers back to the information we've already discussed in item 1.01. confirming that this exchange created a new financial obligation for the company. This item alerts us that Coeur Mining also issued a press release on the 21st of April 2026, announcing the final results of this exchange offer and consent solicitation. Companies use press releases to communicate important news to the public, and this one summarized the outcome of the debt exchange. It is important to note that information furnished under this section is generally not considered formally filed with the SEC, meaning it has a slightly different legal implication than the 8K itself. And crucially, the actual indenture document, which is the contract for these new notes, is attached as an exhibit. This is where all the fine print is. It also names the Bank of New York Mellon as the trustee, who acts on behalf of the bondholders. The press release itself is also attached as an exhibit, giving us another look at how Coeur Mining communicated this debt transaction externally. Now, looking at the bigger picture here, Coeur Mining is actively managing its debt by exchanging older debt for its own notes. They are essentially consolidating and refinancing their liabilities. This is a common strategy for companies looking to optimize their capital structure, potentially lower interest costs over time, or gain more flexibility. The fact that they are offering protections like buyback rights upon a change of control, and during asset sales shows they are trying to reassure bondholders and maintain confidence in their financial stability. What this tells me is that Coeur Mining is not just borrowing money, but they are also carefully managing the terms and conditions of that borrowing. For investors holding these new 6.875% senior notes due in 2032, the indenture and its covenants are paramount. They offer significant protections, but also underscore the importance of the company's future strategic decisions regarding mergers, acquisitions, and asset sales. The key takeaway is that Coeur Mining is undertaking a significant debt restructuring. This could lead to a stronger balance sheet if managed well, but it also means the company is taking on new obligations with specific terms that can impact its future financial flexibility. The immediate story is about them successfully swapping out existing debt for their own, which suggests they believe they can manage this new obligation effectively. The risk I am watching is how these new debt covenants might restrict future growth or acquisition opportunities for Coeur Mining, and whether their revenue generation can comfortably cover the interest payments on this new debt, especially given their long-term obligations. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.